think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Rick, good to have you back.
Daryl, it's a pleasure. Thank you for having me back.
Yes. A lot's been going on, especially markets are everywhere. People waiting for Fed rate cuts, and then they're thinking that we're not going to get it. Inflation has been increasing and decreasing, and so I want to get your assessment on what do you think is happening right now in the U.S. economy and markets.
Well, statistically, the U.S. economy is in pretty good shape still, Daryl. One problem is that it's in good shape for part of the country and not so good shape for the rest of the country. So there's a bunch of folks who don't feel the statistics, and those folks aren't happy. I mean, to personalize it, if you're old, well-educated, fat, may as well say it, white, and rich, the economy is working for you. If you have access to credit and you have enough education to know how to use it, this economy is pretty good. You know, these artificially low interest rates, it's pretty good. If you have been lucky enough or fortunate enough to build up some skills, either individually or through your education, skills that are in demand, the economy's never been better. If you didn't have the opportunity or didn't take advantage of the opportunity to learn those skills, a full employment economy means you're working 3 jobs and still not getting ahead. So I think we need to, I think we need to discuss it in just that sense. When you asked me the second part of the question about inflation, I've got something I just want to get off my chest. When folks look at inflation, they think of the CPI number. And I regard that as the CP lie. If you look at the CPI, you are told that inflation is going up at 2.6% a year. I mean, give your head a shake, right? What's happened to gasoline prices in the last 4 years? What's happened to grocery prices in the last 4 years? What's happened to rent in the last 4 years? And the weirdest thing about the CPI, allegedly a cost of living index, is it doesn't include tax. Now, for most working Americans, tax is the largest household expense they have, often larger than rent, food, energy, and transportation combined. I guess if I didn't have to pay the tax, I wouldn't bitch quite so much about the index. You know, I think people need to understand what's happening to them in terms of inflation, and they need to reorganize their lifestyle and their savings so that they can keep pace. Enough of my soapbox.
Appreciate that. Yeah, so I mean, and that's good that you mentioned that there's a tale of there's two separate economies. One people group is benefiting, others aren't. So one people group's getting entitlements and cost of living adjustments. Others are having to get another job or 2 or 3 jobs to be able to stay afloat and such. And then also, I mean, some people who were debt free going into the rise in interest rates pretty much probably benefited a lot more than those who had debt because their credit card interest increased, their car loan interest increased. So they're having to pay a lot back to the creditors right now.
And I think it's going to get worse. I mean, I believe that they likely will be able to institute a couple of rate cuts, but at some point in time, the people who buy government bonds are going to call it BS. If you believe, like me, that the underlying rate of the deterioration of your purchasing power is more like 7 or 8% than it is like 2.5%, and the banks, or let's put it differently, the Federal Reserve, which is more what the government controls, is paying 4.3, 4.4 on a 10-year treasury. At some point in time, they're going to give a treasury auction. Nobody's going to show up. Why would you put your money out for 10 years? I can see why you can put it out for a year, but why would you put your money out for 10 years at 4.3 when the purchasing power of your money is deteriorating by 7 or 8? It's the same as losing 3% a year. At some point in time, the market's going to get nervous about that, like they did in the early part of the decade of the 1970s. And then the Fed's going to lose control of the interest rate, just like they did in the 1970s. Many of your viewers weren't there in the 1970s, Beryl. They can tell by looking at me. I was there. I remember it real well. I remember when inflation caused the interest rate to go up to 18%. And if folks think that they're having trouble with consumer rates at 6 or 7, they got to ask themselves what kind of trouble they'll be in at 22 or 23.
Mm-hmm. Yeah, for sure, for sure. So, and with that, I mean, like, because you have the real interest rate that you're getting on your money and everything. I was kind of wondering. So, transition a little bit to commodities. We have the symposium coming up, and I like when you bring on Robert Friedland. Robert Friedland, started his copper mine and everything. And I want to transition here because this has to do with the economy, like recovery and such. And like I've heard that copper tends to rise when the economy is on the upswing. We have all of this talk about electrification and such. And so I want to spend a little time there. We don't have a lot of time, but I want to spend a little time there in terms of like your view on copper and everything. Time out. Quick break in the action. This message is brought to you by the Rule Symposium. This annual symposium is hosted by the legendary investor Rick Rule himself. It will take place from July 7th through 11th in Boca Raton, Florida. Mr. Rule invites some of the most brilliant minds in macroeconomics and natural resource investing. This year, featured speakers include Danielle DiMartino Booth, Nomi Prinz, Jim Rickards, Grant Williams, Lobo Tigre, and more. Rick even organizes the Living Legends panel where he invites individuals who have built billion-dollar businesses from scratch. Attendees will be introduced to a myriad of companies active in the natural resources space, with the companies invited being the ones that Rick Rule invests in himself. The symposium is held at the Boca Raton, which is an amazing resort with exceptional amenities. I attended in 2023 and thoroughly enjoyed my time there. I went on an amazing cruise with Rick and other investors and CEOs of companies, and even had the opportunity to test drive an Aston Martin for the first time. So don't miss out on this opportunity to have fun and receive high quality education to help secure your financial future. Click the link below to sign up, and I promise you won't regret it. But if you do, Rick offers an amazing money back guarantee. So what are you waiting for? Click the link below to sign up today. Now, without further ado, let's get back to the content.
If you believe we're going to have a recession in the next 5 years, then you got to be a little bit nervous about copper because, as you suggest, it's really economically sensitive. We need to begin the discussion by saying that the industry and society as a whole has underinvested in copper for 30 years. And we're coming to a supply cliff. There's nothing we can do about it. Nothing we can do about it. But if we have a recession and demand goes down, supply can go down too, and it won't impact price. So somebody's action as an individual investor is really going to depend on their economic outlook. Longer term, there's nothing that can derail copper. Here's why. There's 1 billion people on Earth, 1 billion, that have no access to primary electricity. They don't live like you and I in Northwest Washington, right? These are people who live in Indonesia, Malawi, places like that. But there's 1 billion people on Earth that have no access to primary electricity. Another 2 billion people on Earth only have access to unaffordable or intermittent electricity. And Daryl, they want to live just like you and me. We've done a great job in the last 40 years bringing up the poorest of the poor in the world to the point where they're not desperate and starving. They're just dirt poor. And I think we're going to address a lot of those problems in the next 20 years. I think what you saw happen in China, 2000 to 2010, going to continue to take place. And all that is going to take copper. It takes copper to generate power. It takes copper to move power. Once you get the power, it takes copper to use it in your house. And then those of us who are already there in terms of access to electricity want to use more of it. It improves our life. It might be an electric vehicle. It might be battery storage to smooth out the power consumption in your home. The truth is that we use and will continue to use a lot of copper. And because we haven't invested in productive capacity in copper for 30 years, we're gonna have some shortages. You know, in the United States, in Arizona, copper country, there's a wonderful deposit called Resolution. Well over 1 billion tons of 1.5% copper. Put that in perspective, it's 3 times the average mine grade worldwide. And it's in a great place to mine. It's next to copper mines. It's next to towns where copper miners live. There's highways, there's railroads, there's power, there's water, everything. There's also, unfortunately, government. That mine has been in permitting for 26 years. 26 years. And that's a problem that the copper mining industry is facing worldwide too.
Mm. Yeah, that's alarming. I mean, especially just this is something we need. I mean, and I don't know if you research much like about electrical grids, right? And so our grids are pretty outdated. Do you have any information there as
Our
well?
grids are a mess. You know, they're a mess. We have all kinds of competing regulation in the U.S. about upgrading the grid. Uh, the best estimates I've seen with regards to the cost of upgrading the grid, ironically, come from the Chinese, who suggest that a grid upgrade in the United States to bring it into the 21st century would cost about $8 trillion. We've made a political decision in the United States that we're going to rely more on intermittent sources of electricity, things like wind and solar. And that's not all bad, but I don't believe in it, but that's a different question. Um, you got to be able to get power from where the sun is shining to where it isn't shining. You got to get power from where the wind is blowing to where it isn't blowing. And probably you need to make the grid addressable, which is to say that you charge people more for power during peak times when it's scarce and less for power in other times when it's plentiful. Uh, that is going to require an enormous investment, and it's going to involve changing the way that we regulate power distribution, which, given the 26-year permitting hurdle for the Resolution copper deposit, probably means politically it's a very, very tall order.
Mm. Yeah, 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 that shows the inefficiencies of our government. You know, investing trillions of dollars in these power sources that aren't reliable and neglecting the obvious sources of energy and such that we need to make this clean energy transition. So there's a lot of like debate right now in terms of like clean energy. I've seen people call it a scam. Some of the people I look up to, like Doug Casey, and I've engaged with him on it. I've engaged with Brent Cook, and Brent Cook, talking about the CO2 and how it traps in heat and such, and so global warming is real. And a lot of these were like from other conferences I've been to where they've talked where people present different cases for it. And so how do you personally like reconcile this? I mean, obviously, not to get like political or anything, but just like what's the reality of this, that for people that are trying to figure this out, like, okay, is this true or what?
Daryl, I think we need more of all kinds of power. I've invested in wind and solar, stuff like that. But I invest in solar where the sun shines. The idea that you would invest in solar in northern Germany or in Toronto where the sun doesn't shine is pretty stupid. Pretty stupid. Uh, Let me give you a statistic. Over the last 40 years, industry has invested over $5 trillion. That's five with 12 zeros to the left of the decimal point. It's a big sum of money in alternative energy generation. And we've reduced the market share of fossil fuels from a high of 83% 40 years ago, all the way down to 82% today. $5 trillion investment has reduced the market share of fossil fuels by 1%. And we need more of all kinds of power. Remember, there's 1 billion people on Earth with no access to electricity. Now, whose business is it to tell them that they should go out without electricity In particular, what right do a bunch of fools have to fly 1,000 private jets to Davos to tell somebody in Malawi that they can't have a light bulb or tell you that you should drive less? It just doesn't make any sense. I've got a lot of respect for Brent Cook. I've invited him to debate another geologist, Ian Plimner, who's a good friend of mine and a friend of his, by the way, about global warming. I would love to see two reasoned perspectives on global warming. Both of them have studied it more than I. I think that Brent's perspective, or part of his perspective at least, which is to say, we just shouldn't be putting more crap in the atmosphere. We shouldn't be putting more crap in the ocean. All that makes absolute sense to me. But I also know that I don't have the right to tell a poor villager in rural Malawi that he or she doesn't have the right to live like me. And I am very aware of the arithmetic around generating power. I'm, as I said, aware of the fact that we spent over $5 trillion in so-called green energy, and we've reduced the market share of fossil fuels by 1%, from 83 down to 82. Man, this is just simple arithmetic. I'm all for that green narrative. As you know, I live on Puget Sound. I want my water to be in good shape. I want my air to be in good shape, all that kind of stuff. What I want doesn't necessarily conform to arithmetic, and it doesn't conform to the realistic needs of a billion very poor people.
Mm-hmm. Yeah, it's almost like this. The Industrial Revolution created the standard of living, that many of us have, our comforts in. And so for me, going to Seattle every day, I'm on a hybrid electric ferry, then I have an electric scooter, and I'm like, hey, I'm doing my little part, right? Getting to work every day, and just thinking about it in terms of like, how many people don't have the standard of electricity that we do have, and that like really just that's one of the main things that really forms my conviction about uranium, and nuclear power. I mean, right now we're seeing AI, have a huge demand, and these corporations are like, hey, we need to make it clean, especially to be in political favor, but also just like how efficient it is. Just a little block of nuclear can power a house, right? Of uranium can power a house. And, I'm just kind of wondering, like, okay, it seems like the future is going to look a lot different, especially when you think of uranium and how nuclear is coming to the favor of governments around the world.
No, that's very true. And you need to realize that living in Northwest Washington, you're extremely fortunate. You have access to hydro. You have access to surplus power from British Columbia. If you need to, this is a great unkept secret in Washington, you have access to coal-fired power from Alberta. And of course, you have access to nuclear power from the old Hanford Reserve in South Central Washington. There are other parts of the country that are much less fortunate than you are in the state of Washington. And the investments that you're talking about are going to have to be made in order for you to avail yourself of electricity. If you decide, which I think is your right, to have an electric scooter as opposed to internal combustion engine, that presupposes you're going to keep having electricity. And that supposition, maybe not for you in Northwest Washington, where you're lucky to live in a wonderful region for power generation. But for much of the country, the continued availability of accessible and increasingly green energy is going to require, as you suggest, both investments in nuclear power and separately investments in upgrading the grid.
Mm-hmm. Yeah, for sure, for sure. Yeah, that's really good. So we have a currently well, we got about 10 minutes, so I want to jump into a little bit about silver and gold. We've seen I recently interviewed Jeffrey Christian, and and he comes with some charts and stuff, and like he really got me thinking, about like, okay, some of the assumptions that I've made. Um, so I was kind of wondering, like, we do have central banks buying gold. The people of China that's been driving a huge demand for
Right.
physical metals, and the prices, price measured in dollars has increased significantly near all time highs. And silver's been, catching up a little bit. I mean, it finally broke above $30 and it came down a little bit. So I just want to get your assessment on there as well, like, for our gold and silver bugs that watch the show.
Listen, Daryl, I'm a closet silver bug. Uh, there have been three different times in my career when silver really, 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 that's a lot of reallys, paid me. And at 71 years of age, I'd like to experience that at least one more time. But that requires patience and it requires persistence. What the current crop of silver bugs seems to forget is that being right often involves being wrong for a while first. Historically, uh, precious metals bull markets are always led by gold because the primary motivator for a precious metals bull market is fear. And gold is the commodity for scaredy cats like me. When the narrative is established by gold, when the momentum is established by gold, when the generalist investor comes down into the precious metals ghetto, what happens is that midway through the market or such, leadership shifts from the fear buyer to the greed buyer, the silver buyer. And then silver moves much further and much faster. And the most volatile asset class that I know of, with the sole exception perhaps of the uranium juniors, is the silver juniors, because there's not enough market cap in the legitimate silver juniors to hold the money that comes in from the generalist investor. People keep asking me, when is this going to occur? And I just got to say, I don't know. I mean, the truth is, in the last 6 months, a basket of the decent silver juniors is up by 50%. And I watched some people on some internet forums saying, when is silver going to move? And I'm tempted to say 6 months ago, January, sometime like that. 50% is a pretty good move. You look at some of the companies that we've talked about in the past, Visla and companies like that, Abra, Aya, they've had damn good moves, really good moves, but not the kind of moves that you would expect in a real, true silver bull market. When will this occur? Honestly, I have no idea. I believe the move in gold is underway. The fact that I believe it to be true doesn't make it true. People will need to decide for themselves. If past is prologue, when the primary trend has been established by gold, you should see silver come to fore. You may recall, Daryl, I recall because I reviewed my notes from the last time that you interviewed me, so I didn't say something stupid or too stupid today. But one of the things I said about silver last time was what I liked about it is that there was so much hate around it. All those folks in the sort of Reddit silver squeeze back year 2020, 2021, you remember the same sort of GameStop crowd, all sort of crowded into silver. And they were all disappointed. And there's no hate that's as sincere as the hate of the jilted lover. And silver had, especially the silver stocks, had a whole bunch of jilted lovers. And the consequence of that is it was pretty easy to assemble a portfolio of junior silver miners without moving the market. And silver's starting to become less hated. So maybe the bull market comes sooner than later. But people who want to play the game, Daryl, they got to be prepared to be wrong for 18 months, 24 months, and they got to be prepared psychologically to participate in a market that's up by 15% and then down by 15% for no particular reason. You don't own silver because you think it's going to go from $29 to $31. You own silver because you think it's going to go from $29 to $50 or $60. And you don't own the junior silver stocks because they might go from 78 cents to $1.30. You own them because they might go from 78 cents to $10. That's why you own them. Owning them in anticipation of that kind of reward requires patience, it requires persistence, and it requires tolerance for the risk that you might be wrong. If you can't meet those three qualifications, I don't know, go buy a savings bond or something.
Yeah, yeah, for sure, for sure. Well, and one way that people can prepare themselves is to get educated, and you have a awesome symposium coming up in a few weeks, and so I want to give you opportunity to talk about that because people are going to get. I mean, you can attend virtually or you can attend in person, and so obviously I advocate for going in person, but virtual is fine too. But I want to give you an opportunity to talk about that.
I'm delighted that you finally came down last year and got to see it for yourself. So you can say good things about me as opposed to me always having to say good things about me. But since you gave me the opportunity, I'll say good things about my conference. First thing is, we've been doing it for 28 years. If you do something for 28 years, it means a whole bunch of people think you do it right because they keep coming back. What do we do right? Well, we have great big picture thinkers. Grant Williams, Jim Rickards, Daniela DiMartino Booth, Nomi Prinz, just fantastic big picture thinkers who tell you about the way the world is, not the way that ABC or the CBC wants you to believe it is, but really truly the way it is. And once we've accomplished that, we have wonderful analysts and portfolio managers who've made money in natural resources for 30 years, not Johnny come latelys from Twitter or something like that, but folks have been there, done that, made money. Importantly, and I know you enjoyed this last year, we have the living legends, folks who built multi-billion-dollar mining companies from scratch. They tell you about what they did and how they did it and how to identify 5 million market cap companies that are going to become 5 billion market cap companies over the course of a decade. There's nobody who can talk to you about it like somebody who's done it. Importantly, at my conference, every exhibitor there, public company exhibitor, has to be owned in accounts owned and managed by me. At most conferences, the qualification to be an exhibitor is a check that cashes. Nobody vets them. I vet them. And if you combine all of those things, Daryl, I'm able to say to your listeners, whether you attend live, and I would prefer that they attended live, but I realize people have lives, or whether you attend in the comfort and convenience of your own home via live stream, we have a 100% gold-plated money-back guarantee. If you think for any reason that you haven't derived enough value from the conference, I will refund your money. No questions asked. One other thing, too. We're going to give you almost 60 hours of programming in 4 days, more than you can absorb in 4 days. I guarantee that, too. The consequence of that is that the whole proceeding is taped, including the breakout sessions. So you'll be able to, for the rest of the year, revisit the conference again and again and again to learn some lessons more thoroughly, to relearn some lessons. But 4 days when you're being fed information through a fire hose, you can't get it all. And so we give you the ability to come back time and time and time again. And as I say, the historical performance of this conference has been good enough that we have an absolute gold-plated money-back guarantee.
Mm-hmm. Yeah, thank you for sharing that. I encourage people to go check that out. And you have Frank Trotter, who's going to be speaking there as well. And you both are partnering for Battle Bank. And so I like the Battle Bank T-shirt. I have to give me one of those. I got the hat and the T-shirt like this. But do you want to share a little bit about that?
Yeah, again, we did it before, Daryl. You dial us back to 1999, 2000. We built a pretty big bank called EverBank. And we did it just by treating our customers better. It was real simple stuff. First of all, this is our branch. If you're not technologically sophisticated enough that your phone or your computer can be our branch, you should probably go to a dumb person's bank, a place with, anyway, you should go to a branch banking system. So it presupposes that you're competent if you come to our bank. If you are competent, because we don't have a branch banking system, we save 1.5% in costs, non-interest bearing costs, which we can pass on to you as a depositor. Most banks, have 15 or 20 deposit products, 6 or 7 of which don't pay any interest. We have one deposit product, a high yield money market account. You can write checks on it. Your listeners need to ask themselves if they get paid interest on their checking account now. If they're not, they ought to check out Battle Bank. A lot of your listeners own gold and silver, Daryl. I know that because I talked to them. At Battle Bank, we can establish a letter of credit so that you can borrow against gold and silver if you need to. And you know what? I'm sorry to say, after you gave me that chance to tout my bank, battlebank.com, I have to jump off because I have another call that started a minute ago.
All right. Sounds good. You all be sure to go sign up. Thank you, Rick, for coming on.
Congratulations on the weight loss. I can see it from here. Good for you.
Thank you. All right. We'll talk.
Thank you, sir.